So excited to go through some top questions that I get with the mortgage expert. This is Ethan Brooks, and he is absolutely fantastic in here for all your questions. You want to
Well,
share?
I'm so glad. Oh, sorry. Yeah, I'm so glad to be here. I got into this business because my first time home buying experience was unfortunately a total disaster. I banked with a certain big bank for a long time, and when it was came time to look into buying a house, I thought, well, why not get a pre-approval with them? I've banked with them forever, which is a common story I hear from first-time home buyers. And I wrote an offer. It was accepted. 2 weeks into my offer, the bank calls me and told me that my loan was denied. And and they just said, best of luck to you, have a nice day. And there wasn't any like other options or correspondence or anything. And my realtor said, well, you didn't take my advice the first time around by working with a lender that I trust, but will you take my advice this time? And so then I called the lender that they work with frequently, and that lender stepped in and saved the day. In retrospect, now that I've been in the business a while, um, all they had to do was set up the loan a little bit differently because I was still in a summer job, like a college job, which is not income you can use for a mortgage application. Because I was like a part-time roofer.
Okay.
And I was in school at the time to go into like pastoral studies to be a pastor. Um, so why would an underwriter use my income if it was temporary? But my wife was already a teacher at the time, and we could use her income. So all that they had to do was just put the loan in my wife's name and close it. And so anyway, I realized that um, this happens a lot. The bar is set, unfortunately, really low for mortgage lenders. It's, in my opinion, too easy to become a loan officer. And so, first-time homebuyers find themselves in this position. So I thought, why not go into business, learn how to perfect the process, do things the right way, and not just not mess up the deal, but actually make it fun. Where we built a platform where we educate clients upfront on exactly what to expect. We built a platform where we proactively communicate throughout the transaction. That way clients don't feel like they even need to reach out to us with questions because we're already updating them along the way.
Right. And you're so good at that. And you
Thank you.
answer every question.
And it's been a lot of fun. So I've been doing this for 7 years now. We've helped over 1,000 families in those 7 years, and I'm looking forward to a whole lot more. We, one thing that we really look for is to create a five-star experience for clients. And we really do look to, create an experience that, again, we're not just telling you how much you owe us and then closing the loan on time, because frankly, that should just be the expectation. We want the experience to be so great that, you wouldn't want your family or friends to use anybody else. And so we actually have over 300 five-star Google reviews because of how much we work on, perfecting, especially the first-time homebuyer experience. About 80% of our clients are first-time homebuyers.
Okay, awesome. Awesome. Well, do you mind if I ask you some questions here that I get a lot from first-time homebuyers? And
Yes, let's go for it.
okay, awesome. So, Ethan, if I'm a first-time homebuyer, how much down payment do I need?
So we have options for as low as 0% down payment. In fact, we can set it up where you buy a single family home with a 3% down or a duplex with 5% down. And then we can also provide a 6% down payment assistance loan so that for most single family homes, the client would only need to bring $1,000 or $2,000 to closing. This
Wow,
is a super unique program that it's actually Wisconsin's first time homebuyer program. So not only can you get access to down payment assistance, but the interest rate available is like a 0.5% lower than a standard conventional loan.
that sounds
So
great.
yes, I would say so. Every young professional, especially every single young professional, should explore this option first. And the reason I say that is there is a household income limit of 100,000. And to get access to this specific program, there's a credit score limit of around 720 is what I see.
Okay. Okay, awesome. And that was actually one of my next questions is
Oh,
what credit score should I be around to get like the best rate? And then what's like the lowest that someone could have?
yes. So the to get the absolute best rate possible, it's 780 plus. If you're a first-time home buyer under certain income limits, it's very possible that you get the best rate even with just like a 700 credit score, so long as your income is under certain income limits. Um, However, we can do loans for credit scores as low as 580.
Oh,
Um, In fact, I had a client that reached out to us and their credit score was 575, which is below the cutoff. But we have and any client can use this, by the way. We have a credit report simulator where we can show different changes made to your credit score or to your credit, like your credit cards, for example. I can plug in literally and say, what if 500 or $1,000 is paid towards a certain credit card? How much would that increase their Experian credit score? And it even says, 58% likely that the score will go up to X. And then we can provide a customized credit repair plan. Um, if your credit happens to be below these tiers that I'm mentioning, um, like we don't just pull your credit and say, tough luck. And one thing we'll be talking about later, I believe, is the concern that if you do apply for a loan, what happens if you're denied? What happens if you don't get a pre-approval? What then? And every client is entitled, in my opinion, to a phone call to talk about options and a credit repair plan to maximize your home purchase and make it as affordable as possible.
okay, awesome. So that makes it a lot less scary because even if worst case scenario, it sounds like you help them create a plan to where they can get there.
Yes. And remember, I've been denied before.
Yeah.
So I'm in your boat. I remember what it feels like. And my goal is to never, ever just say, it might be a short road to get to an approval. It might be a long road to get to an approval, depending on your credit, your employment history, that sort of thing. But we're here to help. We want to help as many people as possible achieve home ownership. Um, I'm a homeowner. I've helped many of my friends become homeowners. The Probably one of the ultimate highlights of my job is helping that person who thought they'd never qualify for a home, not only qualify, but actually enjoy the process, feel like they were educated and explained and, felt really confident, in fact.
Yeah, it's so special. Awesome. Ethan, what are the current interest rates around?
So depending on when you're watching this, so today's date is October 17th. Rates for most people are in the mid sixes, 6.5, 6.25. If you had asked me that question about 3 weeks ago, I would have said 5.99, 6.1. One thing going on right now is the market is very sensitive to, and I'll just say the scoreboard. If we want to use a generic sports analogy, the market is watching very carefully to see that inflation is heading in the right direction, that the jobs report and numbers are heading in the right direction, and consumer spending. So if we zoom out a little bit, most of you I think know that prices went up a lot. And, this is a result of a lot of what happened during COVID. This is a result of the emergency measures that our Federal Reserve took to help keep our economy on track, right? And just like a bad cold, sometimes your temperature needs to go up before it goes down again, right? So our economy is shaking this cold that it has. And what we need to see is consistent numbers that frankly, that our economy is starting to slow down. It's not so hot. Inflation isn't, boiling over. And what we had was a very strong jobs report. Basically, unemployment's at an all-time low. New jobs are being created every single month. And this is actually inflationary because if employers need to fight for employees, they need to offer higher wages to their employees, right? Which is a good thing. It's a great thing to switch jobs and make more money. However, companies need to make money too. And so if their employee costs go up, then they need to make their products cost more too. So this is called a wage price spiral. If the wages go up, they just charge more for their stuff, and then that causes inflation, right? So it's numbers like that, it's situations like that can make mortgage rates go up or down. There's not going to be a quiz on this, by the way. Um, but the goal for explaining this and just sharing some of what affects mortgage rates is when I meet my clients, part of what we do is we schedule a Zoom call just like this. And, we want to chat through what's going on in the economy, why are rates going up and down, where do we think rates are going in the future? And part of the reason that people don't end up buying a house is that they're scared. But what I've learned is that fear comes from just a lack of knowledge. And, if you can turn the lights on and get rid of the shadows, then you're not going to be afraid of the dark because you have more of the information. And so, again, I'm not going to bore you to death like an economics professor, but I will share, why did rates go up? When do I think they're going to go down? And what does this mean for your home purchase?
Yeah, that's all great stuff for everyone to be informed about. Awesome. What are closing costs and like how much can I expect? Let's
Yes.
say I'm doing like a $250,000 house.
So our closing costs are really easy to calculate because they're flat. They're exactly the same for every customer. Um, our processing fee is $1,500. That's it. And then there are a number of other real estate professionals you're going to hire during this process. The lender will help you order an appraisal and pay for an appraisal. That's a different company altogether. Appraisals are about $600 all in. And then you'll also order a title policy to protect you as a buyer, to make sure your loan is set up correctly, to make sure you have clear title to your home, and so that all of your closing documents are properly notarized and signed, and then recorded with the city. And so title fees are around $850. So those are really that's the meat and potatoes of the closing cost. So it's about $3,000 all in, which is more or less consistent, across lenders across the board. Um, the other things you can plan to pay for at closing are the first year's homeowner's insurance premium. You pay that up front. And then you'll also set aside a piggy bank, a savings account for your taxes and insurance. You actually put a couple months to the side, and you'll bring that money to closing. And then what we set up, it's called an escrow account. We set up this escrow account so that if taxes or insurance go up in the future, then there's even a little bit of extra funds in there to cover that increase. That way you don't get slammed with a higher tax or insurance bill if that day should come.
That makes sense. So it sounds like, and I know from working with you, you're very upfront with like your
Mhm.
costs and making sure your clients understand what they're paying for versus like throwing in surprises at the end.
Yes. Yes. Yeah, we again, going back to my own experience, I don't remember a whole lot of conversation happening around how much is due at closing, what's my monthly payment going to be. And we actually have a monthly payment and closing cost calculator that every client is given. And the goal for this calculator is if there's a house you see online that your realtor, that Kaeley sends you from your MLS portal, and you type in the purchase price and the tax bill for the property, you get an instant estimate from a calculator that we set you up with. And this calculator is customized for you and your file. That way, if you do write an offer and your offer is accepted, the numbers that we'll send you, the official ones, will be completely similar to the quote we gave you up front. There are all sorts of online calculators that are way too high, they're way too low, they're miles off sometimes from reality. And especially for helping you out with first-time homebuyer programs with discounts and grants and whatnot, it's very important to know how much you actually owe at closing. So once we help you out with your pre-approval, we'll send you access to your customized calculator. That way you can get that instant feedback. And you can even use this calculator to issue a pre-approval letter. Um, and and the pre-approval part of this calculator is set so that let's say you qualify for a $400,000 home. If you try typing in an $800,000 home, it's not going to let you draft a pre-approval letter. It's capped for the monthly payment and cash to close that you can actually afford.
Okay. Well, that sounds very helpful. And,
We, oh,
oops, sorry, go on.
yeah, this calculator that we do, the Zoom buyer consultation that I mentioned, this is all part of that upfront education that we want to do to eliminate surprises and help, sometimes a nervous, anxious first-time home buyer feel prepared. Um, yeah,
Yep. And I've been talking to them a lot about that, how it's better to be informed and spend the time to get educated
yes,
first so that the rest of the process is just smooth and easy and you trust your team.
yes, yes. And I mean, it doesn't need to be stressful unless you let it. Um, and that's another thing I was hoping to share about was our underwriting process. So in a normal market, and and let me explain what a normal market is because we haven't seen it for like a decade now. In a normal market, there are enough houses for sale and enough buyers where theoretically a property is listed for sale and it might sit a whole weekend. It might sit 2 weekends. And if that were to happen today, it might feel scary because we just haven't seen something like that in years. Um, a market like this almost predates my time in the industry, just because we've been in this shortage of inventory for a very long time. But in a normal market, you write an offer, and the seller is thankful that you're taking the home off their hands for them. They are delighted. They're probably willing to cover your loan costs. They'll discount the house price. Um, that's not the market we've seen in the last couple of years because, again, over the last decade, we have been suffering from a lack of inventory. There are just significantly more buyers than there are sellers. And so, if it's your offer and 5, 10, 15 other offers that's sitting on the seller's table, more likely than not, the offers will hit a point where the top three offers are about the same price. And because there's only so much you can offer in a house before it gets crazy. Because good realtors will only let a house be sold for what it actually should or could be worth most often, right? There are exceptions to the rule. So one thing we're able to help our buyers do, and not only does this give you assurance, but it also gives the seller assurance. We can pre-underwrite the loan, which means we actually complete the majority of the loan process before you even start writing offers on homes. What that means is you can rest assured that your loan isn't pre-approved because a pre-approval is a loan officer's opinion based on whatever knowledge that they have, for better or for worse. A loan approval is a company's actual underwriting decision on a file that they can't change their mind about. Um, once a lender approves a loan, it is time-stamped. There's a paper trail. We're not allowed to change our mind unless you get laid off or spend all your money or you'd have to actually change your financial position.
Wow.
So it gives you assurance and it gives the seller assurance that you're not even writing an offer that's really contingent on getting a loan approval because you've already gotten one.
Yeah. And correct me if I'm wrong, but you've had a lot of luck with that this year of like people winning offers from using that.
Yes, especially in the summer months when, competition, we did see 10 to 20 offers sometimes on properties.
Mhm.
Um, Over 50% of my offers that were accepted were pre-underwritten, at least in part, if not all the way. And, another thing this does is it means you can close very quickly because we've already done most of the work. We've already checked, 80 out of the 100 boxes that need to be done on a mortgage loan. And so if the seller is hoping for a quicker closing, not only can we say your offer isn't even contingent on a loan approval because it's already approved, but we can say, you know, today is Thursday, we'll close maybe not next Friday, but the Monday after that. So in 6 or 7 business days, we can close a purchase loan from start to finish.
That's super quick. All right, I'll ask you one more question here. What's the biggest difference, like you said, between using my bank, like US Bank or, you know, whoever, and then you? Are you more available or tell me a little bit about that?
Great question. So I operate I'll just call it a franchise of our company, which means I was able to hire the team that I have and train them up myself. And part of having my own team that is completely insulated from our company is we can have an on-call rotation where we take turns on nights and weekends being on call so that if questions come up about an offer, which does happen, if there's a situation that involves the lender, maybe there's a negotiation about the seller concession, or they want to close more quickly, or there's an issue with the appraisal, there is always someone available. Um, if I have like if I'm going to a wedding or if I'm out of town or sick, I always make sure that I have backup so that that coverage is there. Um, 90% of loan officers are a single man show. Um, if they are not available, then their loans do not get worked on. Um, and frankly, from what I've seen in the industry, what that means is if a loan officer is always available, then they're never not working, which is not healthy.
Right.
And my thought is, I would like to believe my clients would like a healthy loan officer that is able to actually rest, that has good work-life balance. Because when I am working, I'm on, right? And it's just more refreshed, right? So that's a big one is that we have our nights and weekends on call rotation. Another one is that pre-underwriting that I mentioned. Most companies don't have the resources, ability, systems, and structure to pre-underwrite loans. They just don't have the time or capacity to do it. We relish the opportunity to pre-underwrite loans. Um, Frankly, in my opinion, it makes our life easier because once those offers get accepted, we've already done the work. We just need to plug in the address and order an appraisal, and then we're done. So I would say that's another one. Um, Finally, when a client works with me, my name is on the paper, right? It's not US Bank, this worldwide, nationwide mega corporation. It's Ethan Brooks, and my team brand is Refined Mortgage Group. Like I mentioned towards the beginning of this call, we are obsessed with earning those 5-star reviews and protecting our reputation. So if a loan officer at a big bank messes up, it kind of just works out in the wash and people don't really, you know, um, but I can't afford to mess up, frankly, because people in a small local community talk. And, not only do we want to help you have an amazing experience, but our goal is to help your friends and family, and that you'd want to make that introduction because you wouldn't want them to work with someone else. And so to me, reputation is everything. And so we'll make sure that we, go that extra mile to make sure you have an amazing experience.
Awesome. I agree. Very important. Anything else, like any tips or anything that you want to share right now?
I would just say, if you're interested in learning more, there's a link that Kaeley can share where you can book a 15-minute call with me It's no pressure, no heavy sales or anything. Um, I run my business so that we're always helping anywhere from 10 to 20 clients per month on average. And so, loan officers are often entirely commission based, right? And sometimes when they meet you over the phone, they just see you as their next paycheck, right? We make sure that we're busy enough so that we can provide objective advice. We can say to a client considering a refinance, now's not the time. We think you may better benefit from a refinance in 6 months or something. And so we can be objective about our advice, our decisions, and help you when the time is right for you so that you can feel entirely comfortable with your purchase.
Awesome. And yes, if any of you want the link, just let me know and I can connect you with Ethan. Like I said, he's amazing and he's so honest, which is just one of the many things that I love working with him.
Well, thank you. Thank you for your time. And yeah, looking forward to meeting you soon.
All right. Thanks, Ethan.
Yeah.